Good morning. For those of you who were here yesterday, welcome back. And we do have some new participants this morning, and we have some new participants online. So I will repeat some of the housekeeping processes for today. Today's a full-day session on preparing compilation and review engagements. And we have about 30 participants here live today and about 18 online. So again, should be a good program, and we're happy to have you here. I'm Donna Muirhead, and I look after professional development here at CGA Ontario, and I'd like to introduce two CGA staff members who will be important for you to know over the years. Sarosh Contractor, who's our Director of Professional Services. Sarosh, if you could stand up. And Piyush Agarwal, who's one of our practice inspectors. Piyush, if you could stand up. Thank you. And these two individuals are here as resources for you as you're entering public practice, and they're very accessible by email, by phone, and in person. So I do want to sort of walk everyone through some of the mechanics of today's session. We have 3 cameras in the room, 2 at the back and 1 at the front. And we will ask all participants who are here in the live session to use a microphone as they're asking questions. The reason for that is we have a large enough group here that we need to hear the questions, but really it's for the benefit of those who are online. If we don't use the microphone, they won't be able to capture a lot of the questions. So we did a good job of doing that yesterday, so let's continue that. The online participants will be able to interact in this session. They have a chat function on the web portal. And so as they ask questions of the facilitators, you will notice either Ellie or myself asking those questions over here. Now, there is a new requirement in this program that everyone completes an assessment, a test. It's a 16-question test that you will be provided at the end of this session, and you do need to complete it within 24 hours. And the online participants have received that assessment already through email. And for technical support for the online participants, 1-800-668-8900 extension 411, or through the chat line you can pose questions for us and we can respond to you in that fashion. And the only other thing I'd like to mention and to promote, I guess, is our upcoming Practitioners Convention. Has anyone ever been to the Practitioners Convention? We always hold it in September of every year. Has anyone ever attended? A couple of you, okay. This is a great venue to meet other practitioners. And if you're thinking of going into practice, this is just a great networking opportunity and a great learning opportunity for all of you. And I'm quite prepared, and I've spoken to Sarosh Contractor about this, to extend a 50% discount on this convention for this year if any of you are interested in attending. And if you are, the only thing I ask you to do is that you contact Ellie Baranday directly to register and take advantage of that. This particular convention covers not only practice management issues, but all the technical updates that would be required of you in practice. And it takes place September 15th and 17th. And the other nice thing about this convention is the AGM takes place on the Friday evening of this convention. So it's a great way to interact with senior executive of CGA Ontario and the board. Okay. On to our facilitators, John Navarro and Bruce Clark. I think I'll leave it to the two of you to introduce yourselves again very quickly and take it from here. Thanks.
Okay. Okay, well, good morning again for those who have come back and some has come from a previous seminar and come back, but as you know, you have to take the 3 of them, and this is the second of the third. My name's Bruce Clark. As far as being in public practice or performing functions, I've been doing this since about 1974. Did about 10 years within a CA firm, last 5 years as an audit manager. Worked 4 years for Revenue Canada doing auditing of basically large case files. And then basically, I guess from 1988 onwards, been on my own. And then about 91, 92, John and I actually got together and formed a partnership, even though we were quite aware of each other, since the early 80s, like at that point there. From a teaching standpoint, I've been doing this since 1984, so I guess this is what, 28 years?
Wow.
So time marches on. John?
I'm John Nazaro. I'm also in public practice. I've been in public practice since 1982. I feel like a parrot. I'm repeating the same thing I repeated yesterday. But I'm also on the Public Accountants Council. I'm the CGA representative on the council, and I'm a practice inspector for CGA Ontario as well. Today we're going to go through performing a compilation and review engagement. But we're going to start off and do the same format that we did yesterday. We're going to have everyone introduce themselves because it's also being taped, and for the benefit of those that are here today that weren't here yesterday.
So the other thing is, anytime you want to ask a question or make a comment there, you have to unfortunately ask for the mic for the online people. So we'll just start over here. There you go.
My name is Tony, and I work in service, and I'm just here to help me further analyze if I want to get into public practice.
Yeah, my name is Sai Jaiso. I have been working for Kia Motors Canada as accounting and tax manager over the past 6 years. Yeah. I'm preparing for public practice. Nice to meet you.
I'm Dean Paley. I work with a retail brokerage firm in their headquarters doing financial planning.
I'm Howard Smith. I'm just starting my practice now. I've been doing T1s for a few months.
Hi, I'm Jacob Kim. I've been working with multifamily offices for many years, and I'm about to start my own practice.
Hi, my name is Jin Jin. I'm on maternity leave. I used to work for a retail business, and I'm thinking about opening my own business.
Hi, my name is Connie. I have been working in the industry for in various positions for more than 10 years. So I just started out. I have started my professional practice recently.
My name is Victor. I am in public practice.
My name is Fred, and I'm the senior accountant at Dynamic Hospitality, and I'm thinking about getting into the public service.
Good morning. My name is Grant. I'm a controller with a online retailer, and I'm considering private practice.
Hi, my name is Jackie, and I'm a student, just finished the requirements, and hopefully all will go well when presented to the board on the 17th. And I have a student practice that I purchased from a CA that I had worked for about 13 years. He was a sole practitioner.
Hello, I'm Paul Brett, and I'm the Controller Director of Finance for a mid-sized company, and I'm currently working with foreign investors and business acquisitions in Canada.
Tony Finucci. I've been in public practice since '98, either on my own or in partnerships. I'm just here auditing the course.
My name's Sarosh, contractor from CG Ontario.
Are you in public practice?
No, unfortunately, I'm not. Otherwise, you know, I'd be on top of the world, right?
So you're here to learn something, right?
Yes,
okay,
yes.
Good.
And I was about to say, I'm here to answer any questions that you guys cannot. I can't even think of what they would be, but I'm here. Piyush and I are here for that.
Okay, thank you.
My name is Farouk. I'm taking this session to start my own public practice.
I'm Sulaiman Naufar. I have been in the public practice, but not in the tax and audit. I've been doing some insolvency, but I want to start my own practice in the compilation and the area. Thank you.
I'm Linda Leung. I'm accountant of an investment company.
Hi, my name is Afshin. I'm currently a VP of Finance at a services company and considering public practice.
My name is Ashok Sani. I'm working with the CFO.
My name is Preeti Nair, and I work in the industry for 12 years in Ottawa, and I want to start my own practice.
Good morning. My name is Abbas. I'm working as a financial manager, and I'm considering to do my own business.
Hi, good morning. My name is San Rajarandam. I registered a practice a few years ago with another CGA, and we are trying to get the full licensing. Thank you.
Good morning, everybody. My name is Beyant Bhatti. I'm working for a CCA firm and taking this course and looking for starting my own practice.
Hi, my name is Amarjit Bal. I am with a CGA firm and I'm thinking of starting my own practice now. Thank you.
Hi, I'm Michael, and I work for a CA firm.
Hi, I'm Marika. I currently have a bookkeeping practice, and I'm just wanting to take the next step and provide financial statements.
Hi, my name is Johan. I work at a CA firm in Markham.
Hi, my name is Glenn. I've been working in this public practice since 2005 and working for CA firm and CMA firms. I'm considering to open my own business. Okay.
Hi, my name is Vita. I'm working in CA firm for 10 years.
I'm Piyush Agarwal. I'm a practice inspector at CG Ontario. It will be my pleasure to answer any questions if you have.
Hi, Jaswinder Mahal. I'm working for a CGA firm.
I'm Madan Babar, working with CGA firm and hopefully to start my practice.
Hi, I'm Ravinder and I'm working for the CGA and I'm a knowledge freak. I want to have knowledge at any cost from anywhere, anyone. And thank you for giving us so much knowledge. And I want to start my own practice as soon as possible.
Thank you. Okay, so as you can see, people are from different backgrounds and whatever the case would be. Most are still in industries and thinking about coming out. Sounds like your coming out party. Not that coming out. Okay, you want to come out there, but as I mentioned yesterday, and I'll reiterate today, if you've never actually done any year-end files, or you've never done a compilation in the sense of what is required, let alone do reviews or audit, the most valuable experience you can get is within a public practice firm, like at that stage there, because it's a lot easier if you see things in front of you, touch it and feel it and work with it, than try to memorize it or kind of look at it and say, gee, what was this for, what was that for there? It's not the albeit, but I mean, it would resolve a lot of questions. I mean, I worked through a CA firm, had the experience. John worked in an accounting firm and had the experience. So at least when we decided to go out on our own, we weren't that, fearful of what had to be included. As life goes on, and as we get older and everything keeps on changing, course requirement changes, standard changes, but we're also in a changing world as far as reporting, both on an international basis and on a Canadian basis. So our goal today is to enable you to perform simple compilations and review engagements, competently and efficiently. Ideally, we're going to be mostly focusing on the compilation there, because from a legal standpoint, you're not allowed to do reviews, let alone audits, because those are part of what we call assurance work, and they have to be performed by a licensed public accountant. However, always remember, you can actually perform all the work and formats to work it up to completing out the file, as long as you have an affiliation with an LPA who will or she will be willing to sign off on it. The other thing that you may want to consider is maybe try to volunteer yourself to work part-time in an accounting environment of an LPA, so you can have that type of exposure and experience to gain along as time goes along too, right?
One of the comments I heard from the people participating today was, I want to be able to do financial statements, and I think the way this course is set up, it's ideal for that, because we're going to be going back and forth and talk about reviews and compilations and audits. Unfortunately, it's not set up that we do reviews in the morning and compilations in the afternoon, we'll be going back and forth. So it's really trying to guide you and allow you to be able to decide what you need to do to be able to either prepare financial statements or associate with financial statements.
So hopefully our outcome for today is the fact is, come across the terminology of association with financial information, different levels of assurance, purpose and forms of communication, planning the compilation and review engagement, the actual compilation reviews procedures, standard forms and checklists. Checklist is always great there because it gives you guidance there. But I mean, if you've never done a file, just as you've never done a tax return before, actually read the question, because it actually will provide a little bit of guidance from that point. What a working paper should look like, the documentation, common ethical problems, and using caseware and AFP software as a form of working paper generators. Okay?
Okay. I guess, just to elaborate a little bit, I had already started off by talking about the association with financial statements. What we're going to do is hopefully give you a sense of how to put the thing together. And when you're going to be doing a file, hopefully by the end of the day, you'll recognize what it is that you're going to be able to do utilizing software, if you're going to use software, which would be, say, caseware or AFP, or do it manually. But all the components that need to be part of a file. So it's basically a building process. You're going to start off with the data, and that could come in many forms, and then how do you actually evolve to signing and producing these financial statements?
Okay. So like in your handout there, this on page 15, just to remind you that we are in a changer world. We do have the gas updates, like as far as that goes there. If you read the second paragraph there, it is talking about things that are being changed, particularly the handbook. We're going into the world of international reporting, so they have what they call IFRS. For the Canadian standpoint, you got ASPE, like as far as that. So like in the actual sections there of the handbook there, they are now supposedly broken up into 5 parts. The first part is going to be dealing with the IFRS. Second one is with the ASPE. The third part is going to do with nonprofit organizations. The fourth part is for Canadian accounting standards for pension plans. And the last one is Canadian GAAP that may be applied from the beginning of January 1st, 2011. So like 2011 is a change all in other format there. The IFRS came in, I think, whatever it was, December the 14th, 2010, like from that standpoint. The other little comment with the stuff before is the fact is association with a financial statement is an actual defined term. Whenever you are preparing a financial statement, and obviously if you attach a report to whatever that report is, you are associated with it. So if you're associated with a financial statement, you have potential liabilities or responsibilities of obligations, and then depending on what you may or may not be doing, you're obviously subject to, in this case here, you're the CGA, your own professional code of ethics and the other format there. The other way you could be associated is the fact that you've done work before for a particular client, and the client goes out and says, hey, my accountant is Nasero Clark. So all of a sudden the world out there is saying, well, now we're associated with ABC Limited. The last way of doing it is the fact is that somebody actually just announced and infers that you are doing that particular work. So obviously if you have attached a report to a financial statement, there's no doubt you're associated. The other two is an inference. So the problem is you may not be able to control those factors, but you got to be worried about it. So the preparation of tax returns are not considered in theory, that you are in public practice, but you are maybe associated with preparing financial data. So we've had a little bit of conversation that if all I did is just took a trial balance, put it on a jiffy, and then produce a financial statement, would I be in problems with it? And that's what we're going to talk about today, about the fact is, well, technically you are associated with that because you created it. If you haven't created it, you certainly touched it, and if you touched it, you should have or ought to have known if there was something materially wrong. So you just can't go with a blind approach and say, hey, it's a compilation, or I'm not even doing any type of comp or any report, and I'm not doing anything. I mean, that's where we get the conflict, and we'll try to, talk about that subtlety as we go through with it. So, seminar successful practices. We want you to participate as much as possible. Most of you were here yesterday, so we want you to continue on that format. Be aware of your feelings and thoughts. Don't be shy. The only wrong question is a question that's never actually asked. So there's nothing to worry about if an ask point. Listen actively to everybody. Hopefully be open and honest. I've never done this before. Why are we doing this? Accept responsibility for your own learning. Collaborate with others. I like the conversation level that was done during the breaks and at lunchtime or whatever. And remember, that's your informal and potentially formal way of actually networking with people that are in the same environment, the same angst, the same feelings. So there's nothing wrong with that. So ask questions, don't wait for others. They may be waiting. So the actual standards, as we said, we have the CIC handbook, including the guidelines, and the EIC, the CPOC, which is the Code of Ethical Principle and Rules of Conduct, your independence standards, and the Public Practice Manual. The independence standards, as we mentioned yesterday, and we'll reiterate today, is the fact is that if you are associating yourself with financial statements or records, or you also always have to have the degree of, and the appearance of, and the actual format that you are independent. Remember, independence is 90% perception. You know you're independent. The world may not. The world, unfortunately, may not know that. All they see is John Nacero, Bruce Clark, attached to a financial statement, so they just assume is that they're independent. Oh, but Bruce knows so-and-so, John knows so-and-so, or this or that there, or I know that John borrowed money from here, or whatever the case may be. So you got to watch out that the fact is that you also have to always maintain that degree of independence. When you actually get into assurance works, when we do reviews and audits, independence is very imperative. If you are not independent at a compilation level, you still have to divulge it, and where you divulge it is actually in the report. Okay?
The different sections of the handbook, I guess I can quote as they exist now, and as opposed to how they are changing. If we're looking at section 5100, section 8200, and section 9200, those sections are applicable, one to compilation, another one to review, and another one to audit. And so basically, each one of those, they're all very similar in terms of what the requirements is that you're going to do. It's just that if we're dealing with compilation, the requirements for you to put a file together, and we'll go through that in more detail today. The checklists are different, the statements are different, and the depth of work is different. As we move up to reviews, that becomes more, in compilation we're looking for reasonableness, in reviews we're looking for plausibility, and in audit we're looking for a test. So as the scale moves from one to the other, the amount of work is obviously going to be more, and the depth of checklists is going to be a lot more in terms of being able to substantiate the report that's attached to those financial statements. The CICA handbook is a requirement that you need to have. You need to be aware of CPROG. You need to be aware of CGA independence standards. The public practice manual is another thing that you need to have to be able to practice.
Okay. So as I mentioned, the standards of the profession, international accounting standard boards, the international auditing and assurance standard boards, textbook course material like what you're taking now, seminars what you are attending, industry guides and publications. So remember, if your areas of specialization or your area preferred area of formats, you may have come out of a manufacturing environment. So obviously your wealth of knowledge is in that manufacturing area. You may actually want to service only manufacturing clients. So obviously if there's particular industry standards or formats or whatever to that particular industry, then you should be aware of it, because things are being recorded differently, things are allowed to have things may have grants or formats that have to be highlighted. Accounting magazines, hopefully any hot topic is always being brought up there, so there's nothing. The statutes and the laws, both from a tax standpoint and from a legal standpoint, and any other reasonable sources. So unfortunately, you're starting at what's the best way of saying this? You're not expected to memorize everything. What you really should be aware of, the fact is that you have access to all that information, and a lot of the stuff in twigs at the back of your head, I kind of remember that somebody mentioned something about that. I'm not too sure what it is, or I've came up with a new issue. You have the ability to research it, to look it up, to phone somebody, to do it in that format. Well, I came across this situation. How am I supposed to handle that? Obviously, if you're within an accounting firm that's multi-level and you have different people that have different experience or expertise, you would obviously tap on their door and say, hey, John, what do you think about this? Because that's what you do, a little bit of brainstorm and a little bit of information. So the main thing when you're in public practice is the fact is, if you're in industry, you're always working on basically one set of books, one set of standards, one set of format. When you're in public practice there, you're working on multiple clients that have multiple issues, even if they're in the same industry. Because nobody ever does everything exactly 100% the same way. A would be bored, and there'd be no challenge. So obviously, for whatever crazy reason, people do things in different ways. You as the accountant, it's like you take a ruler. You can have a true ruler in the sense that you know how to measure stuff there, but you as the accountant should be able to unravel it, to reorganize it, or to snip it out, or to analyze it, or whatever you need to do to present it in a fair format. And the difference of the levels of the type of financial statements that you're issuing will require different types of work or level of observation, review, analysis, or inquiries, or whatever the standpoint.
Statutes and laws, be very aware of the statutes and laws that apply to that business that you're working with. It could be in the travel industry, which there are specific requirements that you have to do. It could be a non-profit organization. So you've got to understand the requirements that the business is faced with in order for you to be able to assist and take that on.
Okay. So the adequacy of any accounting system. The system capability and limitation, requirement of the system, internal control, audit trails, possible problem, competency and skill of staff, help feature, input, output, use of the system, and other. So in other words, you're going into a client. So you have to do type of evaluation. Hopefully the first evaluation that you do is you and them going to have to decide what type of engagement you're going to be performing. Once you decide what type of engagement you're going to be performing, then you can look at those records or whatever the format with whatever discerning eye that is necessary. And besides, technically, you have to have an engagement letter before you can toe dance with somebody else.
I guess to enlighten some people, it's very difficult to have a new prospective client come in and for you to already predetermine what they need. You really need to be listening and observant and look at all of the requirements that client's faced with. He may come in looking for a compilation but have a bank agreement that requires a review. So you might go through the process and do that and find that the compilation is not going to meet the requirements for his bank loan. So once you go in, you're going to be doing all of these analysis through your interview, and at that point you're going to have to make a decision. You're the accountant. You're the one that should be advising them. This is what you need, as opposed to them coming in and dictating, this is what I want. And this is part of this extends from the discussion we had yesterday with somebody coming in and saying, I only want you to do my T2. You should be analyzing what is it that this person needs, as opposed to them walking into a grocery store and just picking something up off the shelf. You got to decide. And you got to say, well, this is really what you need. And if a compilation is appropriate, then that's what you move forward with. If a compilation is not appropriate and you can't provide that, then you're going to have to tell them, I'm sorry, I won't be able to do that for you. You're going to have to go elsewhere. So it's very important for you to do all of that analysis, as opposed to just letting somebody walk in and say, this is what I need.
Other types of assistance in preparing the financial statement. You may be asked to set up the accounting system. You want to review monthly financial statements. You want to supervise or instruct client staff, preparing journal entries. But you got to watch out that if you're preparing journal entries, you got to make sure that they're agreed by the client. Otherwise, you have a threat to independence. Analyzing accounts, handling confidential sections such as payroll, reconciling subledgers, and other. Now you got to remember, those two little PowerPoints that we just showed you is also on the general assumption that the client that you have in front of you have their own accounting system, have their own bookkeeper, and you're out there to evaluate it. More than likely, especially at the starting off there, you may have a whole pile of clients that all they're doing is just bringing in loose records. Here's my check stubs, here's my deposit books, here's my payroll that I've done, and they will want you to do a combination first of a bookkeeping service to summarize it, and then eventually hopefully evolve into a year-end financial statement of whichever type there. Failing that, you may come up to the point, like in the reverse, that the fact is, okay, what type of system would you recommend for a particular client to utilize? So first you would have to analyze, well, what type of business are you in? What type of volume do you have? And what type of system are you capable of controlling? No point giving them a computer system or a format there, because remember the old adage, garbage in, garbage out, it just spread around a hell of a lot more in a computerized format. If it was handwritten, like the way we always used to do it, I said, I really appreciate that your wife is doing the bookkeeping there, but it would probably just be a lot simpler if all she does is just write down the cash disbursement, like the checks, and probably stop trying to allocate it for the accounts there, because one month she puts it into purchases, the next month she puts it into advertising and promotion, the next month she puts it into office in general, and yet it's the same supplier doing the same stuff there. So like the problem is, you got to remember that your clients are utilizing their knowledge to do their stuff. So they're an engineer, they're an electrician, they're a carpenter. That's their main focus. They begrudgingly do the format that they have to do invoices, have to do receipts, have to do collections, whatever. And they even more begrudgingly have to take the fact that they have to summarize it, which is why you're offering accounting services. The first level of all you're doing is summarizing data, you're just doing basically bookkeeping. Hopefully you want to go beyond that, that you're actually formalizing, that you're working on what we call year-end files, right?
Does anybody have any questions so far?
Come on, we're going to ask questions.
Too soon.
Too soon. Okay, so as I said, bookkeeping service, data entry, manual write-up services, doing payroll work, that eventually is going to evolve to the T4s, T4As, T5s, and others. And when are your T4s due? February 28th. So guess what that is? That's a deadline. So if you have a deadline, you should always remember or mark down global deadlines. And then from those global deadlines, you fine-tune them for each client. So all clients have to issue their T4s, and they all have to be done by February the 28th. They all have to issue their T4As, they all have to issue their T5s. If they're doing a T3, and I hate T3s, in the sense that from a tax preparation standpoint is a pain, well, those are due 3 months after their fiscal year end. So a lot of them are December 31st, so that's why they don't come out to March 31st. So if a lot of your clients have a lot of trust income, you may not get that information to the first or second week of April, like at that stage there. If your client is in contracting and whatever, and then they have subcontractors, they're going to be obligated to do a 5018, and they're due at the same time after the client's fiscal year end, not necessarily December 31st. So you may have a reconciliation problem. Provincial sales tax report. Well, we're in Ontario, so maybe those are eliminated.
Maybe.
Maybe. After BC, maybe we'll be back. Okay, GST, HT reports. So right now they're only HST reports. Workers' comp remittances. So always remember the evolution. Always remember that the fact is, okay, if I'm doing a payroll, what do I have to do? I may have to issue T4s. I may have to do monthly reports for workers' compensation, and I may have to do monthly reports or an annual reports for EHT because we're in Ontario. And all those reports are going to have to be summarized on a yearly basis and issued out there, but some may have obligation to pay them monthly or to file them monthly. So you should actually know that. Globally, always remember the global issues, but then specifically to the client. And that's what's going to be part of your organizational, which is what we talked about yesterday. So what you want to do in a practice there, you've got to say, okay, each one for the client, Like what we have in the office there, we have our HST there, and every month we say, okay, we list all the clients that are due in that month. So that gives us a little combination of a checklist, and also when to call in who and whatever to bring the records in or to update it or to remind us that this is all due by right at this particular point. And the main reason we want to do that is to avoid late filing charges or non-filing charges. Okay? Banking services and payment of client bills. Again, the payment of client bills, as you can see, those are all bookkeeping functions. And then if you actually are doing, if you're ever doing like reviews and you do an audit, they may be threats to independence. Because if you are preparing everything, then how can you independently review something? So you got to watch out if I'm like
self-review threat.
Self-review.
I guess, you know, this is probably one of the downfall of the way we're going through this process, is because we're talking about a lot of different things, but every once in a while I have to step back and relate it to what we're really doing here, is talking about compilations and talking about reviews. So basically, you might be involved with a client in either preparing some of this stuff, but if you don't prepare it, make sure that when you're doing the file, you're looking at them and you're documenting it in your file that they've been done, they've been filed, where the liabilities are at, and all of those things. And that's why it becomes very difficult to do a compilation engagement just with a trial balance. You could see all the things that happen within a business. So if you just close your eyes and look at a trial balance, it really isn't going to tell you much unless you go through the process of actually looking at the GST returns, doing some sort of a reconciliation. You don't know where the liability is at. And if you don't know where the liability is at, you can't tell if it's false or misleading. Okay, so basically keep in mind as we go through this.
We're trying to show you the evolution.
Yeah.
Remember, you gotta crawl, then you gotta walk, then you can run. So right now, the bookkeeping in an accounting terminology, it's just that you're crawling. It's a necessary evil. You have to summarize data. Either A, you do it. B, ideally, if you got staff, you want them to do it for two reasons. Because A, you don't want to do it, and then the other reason is the fact is you're paying them a lower salary, and this is relevant to a lower fee base. If all you do in the whole week is if you spend your 40 hours and all you're doing is the bookkeeping, you're charging a bookkeeping rate, you're only making $30 to $50 to $60 an hour, so you're not going to be making that much. You'd rather be working on year-end files or management consultant, tax consultant, or whatever, that you're getting a higher rate in the per time, which is the other reason usually why you have staff. A just for volume purposes, but also to segregate duties and also to match different levels of authorities with different levels of abilities too.
Yeah. The impact that you're going to have is that businesses don't start off with a computerized system, and actually today they probably can because they're really not that expensive. But most of the time they start off, you could end up getting a file that comes in a shoebox at the end of the year, and everything is in there pertaining to that business. And so you're going to be involved with a lot of these things, as well as, he changed the slide on me.
I changed it.
With a lot of those things, as well as incorporating that into your working paper file to eventually get to your financial statements. Okay, so keep that in mind, that the size of the business and all those things have an impact on the way the information is provided for you. For the people that are in a public practice environment, they deal with that all of the time. It's not a big deal. For you that are actually exposed to it one client at a time, it's like a new venture. Every time that new client comes, you know, you're having to reevaluate what am I dealing with and where am I going with this, and hopefully the next time something similar comes, you get that benefit of reusing that knowledge on that particular client, on the new client, and make more money.
So in the bookkeeping function, just to reiterate, to go into more, you know, like you are calculating remittance for tax installments, you are collecting of accounts receivable, you are preparing general ledgers and sub-ledgers. Like that, this is true bookkeeping. If you are an external bookkeeper, even the collection of accounts receivable, the payment of bills would be pretty hard, because then you've got to have to get those from the client standpoint there. Usually the client at the minimum pays their own bills, sends out their own invoices, and collect what they don't do, they don't summarize it properly. Preparation of the general and sub-ledgers, publication of monthly financial statement. But remember, even if you're using Simply Accountant or QuickBooks or whatever, the fact that that those financial statements are being prepared off the system and you are letting them go outside, that at the minimum you're still subject to at least a compilation standard because you've been associated with a data. So you can't say, well, hey, I never assigned my name to it. Preparation of special reports for bankers and creditors or government, Statistic Canada reports, and other repetitive function. So this is your low end of the scale within an accounting practice or just simply having a bookkeeping practice. Nothing's wrong with it. Very viable business and whatever the case may be, but it only has a certain level or a certain type of piece. The only way you can make excessive money on this is that you have the volume. It's like you got to take the Woolworths approach, 5 and 10.
I'm sure there's quite a few people that are actually in the bookkeeping cycle already doing that.
Yep. Part of your obligation when you get associated with data and whatever, you have to be actually aware of that the fact is, unfortunately, people do like to launder some money. And you know, they may or may not be affiliated with terrorist financing act. So anything that you're looking at, you have to be aware that the formats or exposures to that. I mean, hopefully it should never be an issue for anybody, but it is something that you should obviously be aware of, part of your code of ethics and your standards. Okay.
Yeah, all of these things that you're required to know of, we don't cover them in depth, but we're just making you aware that you should have a working knowledge, so that if somebody walks into your business and it doesn't sound plausible what they're doing from a cash standpoint, then you should be aware of how this interacts with that particular situation.
Why would a stranger come into your office and ask you to deposit something for them into some other account? What's your motive? What's your method? Whatever. Yeah. So if it doesn't look right or sound right, then obviously there's some problem. It's like basically they're looking at like a lawyer's trust fund. Okay, all these monies come into my trust fund there. Okay, that came in from Mr. A, and I turn around and pay it out to Mr. B, but Mr. B's over in Africa. You know, so why are you facilitating that? You know, like as far as that goes there. Yes, the whole idea of trust fund is the fact is to ensure that money's up front to close deals, but they got to be legitimate deals, right?
Remember most of the time they're coming to you to give it credibility. They're coming to you to guarantee or ensure that they're going to succeed at whatever it is that they're trying to accomplish. Somebody could come to you and talk about selling a particular product, and you ask them where they're buying it from, and they can't really be specific. So how are you able to sell something that you can't be specific as to how you're buying it? So you have to ask enough questions to get familiar with the type of business that you're dealing with in order to go ahead. Sometimes you get a little too excited. Oh, I've got a client, and it's a new engagement, it's a compilation, great, and and you're looking at the numbers, and if they're not making sense, be careful, because there could be a lot more repercussion than the fee that you're going to be able to get.
Yeah, I think our office has had a survey from them to fill in.
Yeah.
To actually make a statement that we don't do that. They send it to our firm. Yeah. Let's see, we ignored it once.
They came back.
Ignored it twice. The third time they were a little bit adamant that we didn't do it, that they would not be nice. So anyhow, so like I said, it's not a light matter, but I would say that 90% or 95% of you guys in here would probably not even come close, except for my one little friend in the middle there. I know, we have to check out him. Mm-hmm. Anyhow, in the actual engagement, in the actual engagement file, like as far as that goes there, these are not, like you said, you can have whatever creativity that you want there, but like a lot of accounting firms, and you don't want to reinvent the wheel, they've actually set up little types of formats to do it. But usually within any particular, we usually try to set up a permanent or legal file. Within the permanent files usually are the articles of incorporation or any major asset additions or any special legal requirements or whatever the format. Why? They got to do with that business forever and a day. So sometimes you may have to refer back to her. Sometimes when the guy needs to open up something, he has to provide his articles of incorporation. So clients always go back to the accountant. You have a copy. You have a copy. No, I don't. No, I don't.
Yeah.
Like at that stage there. So like clients are very, what's the word? They rely on you a lot there where they just expect you just to reproduce whatever they're looking for. Well, why do I have to keep the 2008 return? I know you have it, so I'll phone you up and you give it to the lawyer. Working papers, those are your support and documentation to go back with whatever financial report that you are issuing. Correspondence. Don't forget, we're talking about older days, like as far as that goes there, so where you had to do the carbon, you had to do the onion papers and you had to format, but now we have emails and whatever. You can keep your emails in a separate subfolder to any correspondence that's done with client A, client B, or whatever the case may be, or you actually print it out there and put it into a separate file. The tax files are usually the related corporate tax files that have to do with the particular year end. Payroll, if you are doing payroll services for that particular client. Computer records, probably not doing too much of that anymore because everything's done like on a disk format or paperless. Speaking about paperless, we are evolving. So if you do want to do working papers, and it is going to be on a paperless format, you got to make sure that you set up all your checks and balances to ensure that those files are protected. And you have to ensure that you have some type of log or security that those files are never altered, particularly if you have staff, but even for yourself there, because the whole idea is that if you printed off a year-end working paper and all that particular working paper with all the supporting document to issue that particular financial statement, then in theory, if anything was reviewed by an unfriendly person, then you have all your supporting documentation or your rationalization why you came to whatever conclusion to issue that particular financial statement in that format with those numbers. Where if you had to come back there and you go back there and you open your file there and it's been corrupted, or you can't open it up there and numbers have changed and things don't match up there, then your credibility gets greatly diluted. So before you consider going into a paperless society, you got to make sure that the internal controls within those formats are pretty solid and pretty secure.
What I'd like to add is that just 1 second. What I'd like to add is that in a paperless environment, it's pretty difficult to be totally paperless because there'll always be communications with clients and things of that nature. But eventually, that's where most people will aspire to. And trust the computers and keep backups and different levels. And so there are ways of being able to do that. You can scan in documents that they give you, but it's not that easy. How many people in here are in a paperless office with files? 1, 2. Excellent. Good. So we have a question.
Yeah, I think it was probably answered, but let me just repeat it. As we're moving to a paperless environment, is it still best practice to keep a hard copy?
Is it still best practice? I would say definitely in the transition. If you feel that your paperless environment is secure and you've got multiple levels backed up properly, then no, you don't have to do that. Even practice inspection could be done in an environment, in a paperless environment. You don't have to have the file printed out.
Thank you.
Okay. It's coming.
Just backtrack a bit. When you talk about money laundering,
yes.
So when you said the 3 services like engagement, compilation, and
yes.
audit,
yes.
they're exempt. So what does that mean?
They're exempt.
Well, they're exempt in the sense that that's all you're doing. Like you said, your responsibility that if you're all you're doing is audit reviews or compilation, that you don't have to worry about that particular act, is when you start doing that you're actually involved with the records, or do beyond that you may be exposed to the requirements. However, if you did the audits, reviews, and compilation, and something came across to you that made you uncomfortable or whatever, then you still would have an obligation to potentially report it. I mean, like basically this is for you, who's ever involved in it, like as far as a system, to tell somebody else that you believe something is wrong. So in other words, if all you did is all you did was just purely external work, and all you did was the audit reviews and compilation there, then they can't expect you to actually to come across all the areas to ensure that you knew anything about terrorists or money laundering. However, if you are the bookkeeper, the controller, or other people involved, or you're aware of money coming in, going out, or all those transactions, then you may have to adhere to this particular requirement of the Act. Okay? Otherwise you would never. Let's go the other way. If the reviews, compilation, and audits were not exempt, then accountants wouldn't touch any records. Because now you're getting your liability exposure. It's astronomical. Okay, so I think that's the format that they're going towards.
So the CPROG requirement, is it to dissociate yourself from the engagement, or is it like, so this is more like legal duty, right?
That's right,
Yeah.
exactly.
So in terms of CGA requirement, so
Well, you're not supposed to associate, like
You're
the
on the
overall,
right track. When
Yeah.
you said if you're aware of a problem,
Yeah.
then you've got to look at what your requirements are. Do you have to notify the authorities? Do you have to just resign from it? It depends on, I don't even want to give you an example because there could be so many different avenues to be able to take with a situation. But definitely you don't want to, let's say, produce a compilation engagement knowing that funds were received for a terrorist act or funds were received that, was a money laundering scheme. If you're aware of that, you've got a problem if you're still associated with it, right? So,
like you said, it's really not a topic you really want to get overly involved in, because then obviously there's something wrong.
yeah. I think what it means by, I think Bruce answered it properly by saying that you're in the function of doing an audit, a review, and a compilation. You're not directly receiving the funds or paying out the funds. So you're not involved in that act. I think that's really, you got to read it in simple form.
Right.
Hi, I had just a comment about backups in computer systems.
Yes.
Our IT people are pretty quick to say, yes, you're backed up. But have you ever attempted to recover files? Or are you relying on your IT people, and that the first time you have a crash, you realize your stuff isn't backed up?
You should always constantly check the fact that you can retrieve those files intact with no problem.
Because I had exactly that. I kept asking the client, are you backed up? Oh, yeah, backed up. Got a mirrored hard drive.
Oh, we had a client that came
Turned
in
out
with...
there was no mirrored hard drive.
We had a client that came in with 25 discs of backup, and then when we tried to open it, there was nothing on any of the tapes. So
we have mirrored drives on our hard drive, on our server. That's the word. On our server, and it's gone down twice, and it's worked. The mirror drive did work.
Yes.
And it happened twice. So
yeah. But anytime you do a backup or any other format, and don't forget, like a lot of people take for granted and forget about it, the fact is, whatever your system is that you're generating a backup, you have an obligation from a tax standpoint to have those records available and accessible for the last 7 years. So the other stuff is you always got to remind yourself that I got to have the particular hardware that's going to operate that particular machine, that if I was able to retrieve the data, not necessarily for my own self there, but for those bad guys, the government people, that they want to check it. And if you can't do that there, then they'll say you're in non-compliance and you may have big problems there. But anytime you do a backup or whatever, even if you were happy with it, every once in a while, always constantly check it, especially if you got volumes of transactions, because that's very, very critical. Obviously, the smaller the file, yes, you're backing up for safety's sake or whatever, or you got it on your hard drive, your C drive, and you also got it on the server, and it's being sourced. Plus, you may or may not have a hard copy, so you may or may not have 3 or 4 different avenues as far as that goes. But if you got like a client's record, there's your records, and there's a lot of volume, a lot of traction, and whatever the case may be there, you got to make sure that the backup is pretty stable. Plus, if there's a corruption within your file, you got to make sure that you know when the corruption started, that in theory, you can take the backup and say, okay, we did it as of that date, and we would unfortunately have to re-enter the data. So when you get into reviews and audits there, you got to be worried about the continuity and the confidentiality and the continuance of records. And so if there's an attack on that system and there's a gap, you're going to have excessive review fees or audit fees to satisfy the external accountant to do that particular work. So yes, backup should be done all the time, and backup should be checked all the time.
Yeah, and there's much more available today than, as the years move on. You can back up off-site as very easily. And with the cloud that they have now, it's another form of being able to back up as well. So you can do it in a lot of different formats.
Question?
Yes.
It's about independence. Let's say client comes to you and he give you box full of papers, and you are doing everything, bookkeeping and tax, then auditing and review. How you keep your independence, because you're doing everything?
He gives you a box and you're doing a review.
Yeah. He said we need a review.
It's difficult in that situation because you got the threat of self-review if you're doing everything. The larger firms are still actually doing work in those types of situations, but they can separate it by having different people do different things. So they can minimize that threat or eliminate that threat, right? But if you yourself are doing all of those things, yeah, that would be a problem.
So what is the solution for
that? On a compilation, though, just the fact that you're doing the write-ups doesn't necessarily mean that you're involved in any of the decision-making or any of those types of things, right? So you'd still be able to do the compilation.
Yeah, because in practical world, the client comes to you, he need a review. Let's say the bank needs a review. Now you are his accountant and a tax preparer. So you ask him to go to another accountant for review, or you do the review and another accountant do the bookkeeping, but the client doesn't understand.
Depending on the nature, you may have to segregate those duties.
Yeah.
But, ideally, if you're in an association with a bunch of people there, you can have another person actually do the year-end work, or at least do the review of the year-end work. Just as if, let's just say for argument's sake, let's say for argument's sake, there the fact is you got 3 or 4 reviews, and you may or may not have an audit, but you want to control the file, but you're not an LPA. So like I said, you have to associate yourself with an LPA. So you would do all the work, do all the checklists under the supervision of that LPA there to satisfy him or her that you satisfied yourself. But at the end of the day, they do the report. Since you've done all the other function and at the other point, and there's been an external or separate, you've severed a tie, so that should be sufficient to avoid, like the self-review or independence issue. The danger, if you do it from cradle to grave, then when it gets to the point of issuing a report there, you're offside there because, you haven't achieved full independence.
But in practical world, let's say LPA, now the client has to pay 2 fees, me and LPA, right? If he just directly go to LPA,
technically the client's always paying 2 fees anyhow. There's always a fee for bookkeeping, summarizing, and there's a fee for year-end. They're not paying a single fee. And that's the other thing, when you bill, you got to make sure that you're billing for separate services. Like, don't do one bill for $2,400 when you're arguing that $1,500 of his bookkeeping and for argument's sake, $900 to do the year-end. Like at that stage, or vice versa. So like when you do the bookkeeping function, it should be segregated and invoiced even on a quarterly basis, just for a cash flow standpoint there. But anytime you're doing the bookkeeping and you're doing the year-end, you're always, in theory and in practicality, is giving the client 2 services. Like I said, remember, bookkeeping is your crawling. You got to crawl, and then your walking is the actual year-end financial statement. Thank you. Anything else online? No? Yes?
Yeah, there's a quick question here. Is the length of time still 7 years, or is it 14?
For whoever's online, it's 14 years.
14 years for what?
No. Your losses carry forward. Maybe that's why they're getting confused. Your losses carry forward has been expanded to 20 years, but the audit can only go back for 3 years. So what they said is, the fact is, well, if you got to have the records available, you got to have the last 3 years, because if you took a loss today, you carry it back for 3 years, and then you can carry it forward. So that 7-year window was always at the fact that Revenue Canada has the right to go back and do an audit. If you committed something fraudulently, or even more imperative, they can go back to day one. Usually what we do as a rule of thumb at the office, because you know what, accountants are what's the word, we like to protect ourselves. Maybe we're silly and we're idiots or whatever, but we usually try to hang on for 10 years, because remember what I said earlier, clients never keep anything. So we really start crying when we actually shred files. It's almost like, can I really let it go? Right? We really have this real problem there. But I mean, we moved our offices, so we were forced to do it. So we broke ice. So now we just have the second shredded there. So hopefully we'll get into a regular basis. So the more records you have on hand, and the easier it is to recreate or to re-support everything there. But from a legal obligation standpoint, it's 7 years. It's a 7 years prior. And don't forget, technically, you have to get written permission before you actually destroy the records. Things like payroll, I think you got to keep for 10 years.
What was the question about client record retention?
Yeah.
Oh, was that? Okay.
They want to know with 7 or 14 years.
Okay.
Okay? So association with financial information, handbook section 5020, how association arises, professional responsibility when associated, and limited association. So when we talk about the association, have you actually attached yourself to that particular financial data? And if you have attached yourself directly or indirectly, what are your responsibility? Basically, obviously, if you issue a report, you have a higher degree of responsibility to what has or has not happened within that financial data. By inference, like that you haven't done it, let's say for argument's sake, right now, you're August and the December year end. Well, our accountants are going to do it in the Nacero Clark, and they've done an interim statement like up to the end of August there, and they inferred it, and the bank looked at it, and as far as they're concerned, the Nacero Clark did looked at it. Meanwhile, it was always just came off their system. It was on Simply and whatever. John and I hasn't looked at it at all. So the bank inferred that we did. Well, that leaves us exposed, but it's also by inference. Because if it would have been December 31st and the client was still with us and we were still retaining them, then in theory, yes, we would be looking at that particular data. Or the guy comes in and says, yeah, my accountants are Nacero Clark. Like as far as that goes there, and here's the stat, here's some data. And again, we haven't looked at it. So you got to watch out that you are associated directly or indirectly. Okay?
Okay.
But the handbook specifically says what you can and can't do. So association with financial information, what can you do? Indication by the enterprise and third-party assumptions. So like I said, those are your three variables. You did it, supposedly that there's no doubt you've attached a report. The enterprise has implied that you're doing it, or you've always done it the last 5 years, so the third party is assuming that you're doing it or you have done it in the current year, but you've already vacated. So like I said, the last two you got to watch out for because you can't control that. Yeah. Disclosures for unincorporated business. You do still have some obligation. You got to actually make sure that you have the name of the business, the name of the owners, exclusion of non-business assets, exclusion of owner salaries are clearly identified. I mean, from a tax standpoint, salaries are not applicable for for unincorporated people. So, but some people feel like they have to put in. I haven't seen too many of those, but if you happen to have owner salaries, you got to make sure that they're clearly identified. Exclusion of owners' income taxes. Got to remember, the unemployed person, like as far as that goes, that financial statement is only one component of their obligation to file their personal return. They may have investment income. They may have employment income. They may have a rental property. They may be involved with a limited partnership. They also have a business, but they may have 3 or 4 businesses. They may be involved in farming. So it's only one component of it. And any changes within the owner's capital.
When you see disclosure, it usually means that it requires an action out of you. So that means that disclosure will be on your financial statement. There'll be a note on your financial statements indicating that that it doesn't include all of the assets of the proprietor or the partner, and it doesn't have any taxes or any other assets. So you've got to do it in a note format to indicate that particular business, ABC Excavating, is only about the excavating business. It's not about John Doe's other businesses that he has, okay? So it requires an action out of you when you see disclosure.
Okay, so when you issue financial statements, we talk in the terminology, or we will talk in the terminology, are you adding insurance or you're doing non-insurance? When you take an assurance, you're doing statements. So when you do review assurance, you're doing a negative insurance. Nothing has come to my attention that things are plausible. Audit assurance is you're actually making a statement of fact that nothing has come to your attention of any materiality, and you're offering what they call an opinion. So those two types of assurance are your highest level. And in the assurance work there, they can only be performed now by licensed public accountants, CAs, CGAs, or CMAs, like if they have attained it. Currently, there's only about 17.
No CMAs. They don't have the right yet.
Ah, give them some right. Hang on, question.
On this disclosure for unincorporated businesses,
yes.
Yep. Are we supposed to include any note in the notice to reader? Because
that's right. That's what I said.
Because in the normal notice to reader, we are not compelled to put any note there, right?
Well,
it's an option.
Okay, so if you're not compelled, doesn't mean that you can't put one in.
Won't that infer that we did a review or something like that from the notice?
Just because there's a note? No.
No. Okay. And the second question is the owner's salary. You cannot pay salaries to the owner, but what about related parties, a wife or daughter?
Oh, absolutely. You can pay salaries. Obviously, they'll everything that deals with that particular business will be reflected on those financial statements within that business. Okay. The only thing that are not going to be reflected is the owner's other assets and other investments. Whatever the owner's liability towards taxes are going to be, and his other liabilities are not going to be reflected there. So yeah, and that's all you're doing is that's what I said. The disclosure requires an action out of you, and that would mean that you have to indicate on the statements what you're telling the reader is this only deals with this business. It doesn't deal with John Doe's other activities. Right?
Thank you.
Okay. And see, don't forget that's superseded by your rule that you're obligated for the Income Tax Act. When like I always keep on trying to tell the client there. The client tells me he only has $10,000 in the bank, but he made $50,000. So he said, okay, all I have to report is $40,000. And I said, no. I said, whatever your net income is what you're obligated to report. All they're reminding you there that if you have done any allocation for the owner's salary, if you want to keep it very simple, it's just a non-deductible item. So that's why they specifically want you to highlight it to ensure that if you took net income, and for argument's sake took $50,000 and said I paid the owner $40,000, so my net income is $10,000. They don't want to take the chance or the assumption that that business may or may not issue a T4. Because technically, if you did it that way, the person would report $10,000 from his self-employed income and $40,000 from employment. So they say, look, you're unincorporated, so as far as I'm concerned, it's $50,000. So don't give yourself any salary because it's not deductible. But if you do give yourself any salary from a reporting standpoint, also this further reiterates that you should highlight it separately, like from the standpoint there. Okay, question?
So we have a question from one of our online participants, and the question is, what is the process to become an LPA?
Long. Don't worry about that right at this stage. No, okay.
Do you want to just go through it a bit, or maybe we should get Sarosh to just kind of give a synopsis about it? Just an overview with the hours and the work experience,
right,
and the exam. That's about it.
Right.
Just an overview.
Yeah. Let me then very quickly sort of divide it into two parts. We have a sort of a fast track approach at the moment, which is represented by a guideline that the Public Accountants Council has issued, and it's Guideline 6. And if you guys are interested, you can go to their website and look at it. That guideline could apply to you, and I think there was at least one person yesterday at the seminar who already had the hours in an approved training office. So the most important thing under this guideline is that you must already have or should have by June 22nd, 2012, which is 2 years after we, meaning CGO Ontario, got authorized as to issue licenses. You must have by that date 2,500 hours and 30 months in an approved training office. It doesn't just have to be a CA or a CGA firm, but it's got to be an approved training office, and you must have 2,500 hours and 30 months of experience. The 2,500 hours broken up into 625 audit hours and 625 assurance hours, and 100 tax hours, and the rest could be compilations and tax returns and whatever. So if you have the 2,500 hours and 30 months in an ATO, and if you have 5 years general public practice experience, and if you have all of this by June 22nd, 2012, then you've met 2 of the so-called 4 fast-track requirements. The third requirement is that we now have a new course called Applications in Public Practice, short form AP1, which is a 6-month course with 2 6-hour exams. So you've got to successfully complete this course, pass the exams, and then you've completed requirement number 3 of the guideline. And then the final requirement is once you've done all these 3 things and you come to CG Ontario for a license, at that time you must be practicing in a substantive way, meaning the currency requirement. Because if you met all the 3, but you're now working for a not-for-profit organization, working for Revenue Canada or something, and you have no recent public practice experience, then unfortunately CG Ontario won't give you a license. So this is the fast track, but most of you guys might not qualify for the fast track. So then the experience requirement still remains. You've got to go out and get 2,500 hours and 30 months in an approved training office, and you do that either by working for them or the other sort of creative way, in which all of you should consider at least, is that make your own firm an approved training office, meaning go out, get audit clients, get review engagement clients of your own, work on them, and then as Bruce and John have often said these last 2 days, go have an association with a licensed public accountant and get that licensed public accountant to sign off on these financial statements. The clients are yours, because they know you, but you will only be till you get your license. You will only be their accountant. The LPA will be their auditor or their external accountant. He or she will sign off on them. The financials will be issued on their letterhead. They'll be the ones responsible for the audit or the review engagement. And then you would have to formalize this arrangement so you are you're the CGA, and you have this arrangement signed off with Mr. or Ms. X, who's the LPA. And as long as you've got enough hours, we, meaning CG Ontario, will grant you ATO status. We will, Piyush and other inspectors will come and inspect your practice and confirm that yes, you indeed have the review engagement hours and assurance hours and audit hours. And the LPA will confirm that, yeah, I've got this arrangement with my CGA, and I'll be supervising everything. Everything will go out under my signature, etc. So then you'll have the 2,500 hours and 30 months in your own ATO. So you would then qualify under the experience part. Education still remains that you've got to complete the AP1 course. The requirement from the standards point of view, of the standards of the council, is that you must have, at the moment, that you must have a 4-year university degree, that you must have completed our program, done our PA1 course, and so on and so forth. But we could always go to CG Ontario's licensing board, maybe on an individual basis, and say, you know, I'm a CGA, I've got all my, a lot of experience, I'm doing a lot of teaching, maybe like John and Bruce or whatever, and so please exempt me from having to do PA1 if I haven't done PA1, or if I've done it 10 years ago or something. Again, the same thing with I don't have a university degree, but I do have the CGA designation. Maybe I have the CFP or the CPA designation along with it, and so on. So you could apply for an exemption. It's a good chance that you might get it. So I'm not trying to simplify things here, but all I'm trying to say is that basically the key things. And they might not necessarily be the only things, but the key things would be the 2,500 hours and the 30 months in an ATO. The second key thing would be they've got to complete our AP1 course. And the third key thing is if you do all this, but you're not in public practice anyway, then we can't give you a license because you've got to be currently in public practice and all that. So I hope that
that's perfect.
Perfect.
Thank you very, very much.
Sorry, Sarosh, there's actually a second part to
You got caught.
the question.
And sorry if I meant to whoever's asking, even here, if I've simplified it too much. It's not necessarily all that simple, but I mean, these key areas are very straightforward. That you've got to have the experience, and don't even talk about non-ATO experience because that's got to be in an ATO. You've got to do AP1, and you've got to be currently in public practice.
Okay, so the question was actually related to whether an applied degree is acceptable. Does that apply under the LPA requirements?
Well, I think, as I said, the education part is a little bit complex, but we could always go to the licensing board. The licensing board, meaning CG Ontario's licensing board, has the authority to exempt a CGA from almost all of the education requirements, except, of course, AP1. AP1 is non-negotiable, okay? But the other ones, we could go. And I think there's a provision, actually, in the standard itself for an applied degree.
Okay, thank you.
Okay, my only comment is what I usually tell people, I said, look, instead of you worrying about all the other formats and what's got to do globally, phone the association and say, hey, this is where I am, this is what I've done, this is where I'm going, this is what do I still have to do to achieve whatever. So then Sarosh will confirm that, hey, you're going to have to get the 2,500 hours, or no, I'm satisfied you got 1,000 hours. Oh, you still have to take PA1 or PA2 to satisfy this, or you may have to take AU1 or AU2 or whatever the case may be. So instead of worrying about it, you're an individual there to say, hey, this is where I stand, this is what I've done, this is where I intend to go. What are my steps or my blocks that I have to go through? Like right now, I have to take these 3 courses. And after you take those 3 courses there, you're going to have to do a little case file with the compilation. So now you know what your standards are to achieve to go into public practice in a limited environment. So if you want to go to the next level, and that's why I always said it's a lot easier, both from if you see things in front of you and work with it, plus the necessity that you are working for a licensed public accountant, not for a CA, not for a CGA. It's for a person that has a firm that can qualify as an ATO, which infers and is substantiated that they have enough review files and audit files to farm out to you that you can work on, in theory, as a student to achieve that background experience. And that's the only way that's acceptable from that standpoint. And as Sarosh says, based on individual circumstances, things may change or whatever, or be exempt or allowed, but that's on a one-to-one basis. But at the end of the day, you're going to have to take the AP1 and write 2 6-hour exams. More.
I know that Donna mentioned at the beginning about the practitioners convention coming up in about 2 weeks.
Yep.
And I think that the 50% deal is a great deal because
I thought you were going to make it 60% off.
We'll be
Hang on, do we get the 50% too?
No, you're just way too old and too experienced. Way too experienced is what I wanted to say. Tactful.
Way too old.
That's good. He got your back.
Okay, Sarosh.
So anyway, what I was trying to say is that, of course, we've got a variety of topics there, ASPE and tax update and a gap gas update and so on and so forth. However, the relevant part here is that we're going to have almost an hour and a half to 2 hours discussion on public practice and licensed accounting and ATOs and forming larger practice units, and so there'll be
it's a good source to get reference or to affiliate yourself with a potential
exactly.
LPA.
So CGAs and LPAs like you will be there, and so seasoned practitioners and all that. So that'll be a great forum for you guys to talk about. To talk at and discuss things.
The key is to get affiliated with an LPA, and that don't wait till you have a file or done a file and then try to go farming around looking for an LPA there, because the odds are you won't find one that's willing to do the file, because remember, they got to know you. They got to know what type of person you are, what type of work or what capability you are, before they're going to start signing off anything, and nobody's ever going to sign off anything carte blanche. So it's a self-serving scenario. If you're actually working or doing affiliation and work on a subcontracted basis with an LPA, you are attaining accredited hours, which you have to get anyhow, and you are getting practical experience, and you are achieving an ultimate goal. So it is an evolution.
Okay.
Okay.
So I guess we've handled that question.
Thanks, Roche. I don't know about the old person scenario, but that's fine. Experience. I'll take that one. Okay. So remember, assurance, and then the non-assurance. It's what we call the compilation or financial information and tax return. No separate financial statement. Don't forget, if you're into public practice, they brought in the loop about that you are preparing tax returns. Every time that you go out and get a client, I know you're starving, and I know that you're going to take everything that walks in the door and say thank you for showing up there, but you actually should go through a bunch of steps. Also, at the main reason, to protect yourself, at that stage there. So when you look at a new client there, the thing that you got to look at is the client integrity. How confident is that particular client? What type of business are they, and what are they doing, and what are they being exposed to? And are they going to survive? On client's accounting system, going back to, okay, how do you do it? Is it going to be a shoebox case? Is it going to be a plastic bag? We can't say shoeboxes anymore. Nobody ever gives any shoeboxes. You've got to say plastic bags. Reason why you were contacted. It's always nice to know why somebody refers you. That gives you an extra level. If somebody calls you cold, you got to be a little bit skeptical. Not that thing, because you got to have to evaluate them. Reason for leaving the previous accountant, and don't forget it. If they have a previous accountant there, you're obligated to do a takeover letter. So, clients on prior year's financial statement, always ask the client to bring in the previous year's financial statements and tax return, because it's a wealth of source of information. Because that'll tell you where they've been, where they stand, how far they're doing right now, and then you say, okay, and how is this year looking? And where are you in this year? If it's December 31st, you're at the end of August there, all they have done is 8 months. Have you done, if their accounting system back up there is doing something that they can produce monthly statements there, tell them to bring on the data up to date. So in other words, if they are doing their own bookkeeping or whatever the case may be, and it is summarized something like it simply, hey look, bring me last year's financial statement for December 31st and bring me whatever you posted up to the end of July, since we're not right at the end of August. Why? To give you current information and to give you a feel how things have come, have things increased, have new things have happened, have things greatly decreased. Because when you go back to the business risk, the person may be on the verge of bankruptcy, which is like a limited engagement. You still may be obligated to do it, but remember, as I said last year, you got to be looking at clients as being part of your pension plan. You don't want the client for 1 year, you want the client for 35 years. You want that fee to be repetitive, and that's usually how practices are growing.
Okay, what I'm going to do is actually tie this into the actual file, and you're going to have a client profile in your file, whether it's on a compilation review or an audit, and you're going to have to deal with most of this information in each one of the files. You're going to have to communicate with the prior accountant. You're going to have to look at the reply, and if there is a reason, take a look at what that reason is. You know, if the other accountant replies that there's no reason why you should take on this client, then it's not a problem. But if there is, you should be able to, you should investigate and see what the problems are. So on a compilation engagement, you've got to also check these things, as I said, in terms of the client's integrity, you know, and whether or not you should actually be associating with this client and doing a compilation. In a review or an audit, you'll be addressing most of these factors in a much more in depth.
The firm factors, now you're looking from your side. What are your professional standards? The firm resources include expertise. Remember, as I said yesterday, even though you're starving, you should never accept a file that you're not capable of doing. You cannot be obligated to do within whatever time frame, or you don't have that area of expertise or knowledge, or you can't acquire it in a short-term basis. So the danger is when you're starting out there, as I said, you're just happy that the guy walked in the door or she walked in the door, and you're going to accept them. But you know, you got to remind yourself that just because they walk in the door, you don't have to accept them. In some cases, you shouldn't accept them. Assessment of independence, we're going back to that, included all bookkeeping and other services provided. The time frame, their time frame, your time frame. Oh yes, I know their tax returns are not due, or the financial statements are not due to June 30th. Is there any other reporting requirements? Oh yes, I have to send it to the bank by within 60 days, February 28th. And as I said yesterday, okay, and are you going to be around from that? Don't always forget to ask the client. He said, well, actually, the good thing you did mention it, because I was going to leave on February the 15th and not be back to March the 15th. So that implies that you would have to have that file done, signed off and whatever, by February the 14th. So like you said, you got to check your time frame, their time frame, your availability, their availability to meet whatever the obligation are. Always look at the previous accountant's reply. If the only negativity is because of fees, you have to analyze that there because some reason. Just remember, as I always say, usually your accountant, your lawyer, your dentist, your doctor, you never change. Unless they probably die or move away. And even if they made a small error, you probably wouldn't change them. So it's either they made a fatal error, a major error, or there's some major conflict. There's something that you want him or her to do that they said no. So whatever they want him and her to do, and they say no, hopefully, if it's the same issue, you should say no too. Because obviously there should be some major conflict or some issue or some type of reporting standpoint there. And that's your whole idea of your personal ethic, and even involved with your actual professional ethic. Once you get to the stage and say, oh, thank you for coming in there, you know, figure out what the type of service that you're going to issue, and then do the letter of engagement. Are we going to have an engagement to do a compilation? Are we going to do an engagement to do a review? And are we going to do an engagement to do an audit? Or are we going to do some type of special purpose or some special activity? We have to do an 8-month statement because I need to do new financing. So that's only going to be an interim statement. So what do I have to follow? How about before we take the next one, we take a little bit of a break? Sure. Okay? Or that's fine? Okay. So we'll reconvene about 22, quarter to, give or take a minute.